What is up, guys? Stas here. Welcome back to another video. So I was thinking there's three things out there, three potential mistakes that could ruin you in the stock market. They could put you out of business, whether you're a trader or an investor. And I want to share those three things with you guys today. And I also want to share my experience with these three different things with you guys today. And let's just get right into it. If you all find value, hit the like button, subscribe to the channel, go down below, get into the Strive Smart Discord chat, the Facebook group, get 2 free stocks from WeBull. Those are valued up to $1,600. And you could also get $30 from M1 Finance. All of those are free and linked right down below. And if you guys want to support me and the channel in general a bit further, check out that Patreon, also linked right down below in the description box. So the first thing that I have here that could potentially ruin you, put you out of business when it comes to stock market activities is margin. Margin, the good old margin. Margin, they try to lure you in with it. They try and say, oh, we can give you 3 to 4 times buying power of your account. Come here, come on, come use our margin. They try to lure you in, but from my experience, and quite frankly, I personally, truth is, guys, I've never used margin. I have a margin account, but I don't use the extra money that they give you. And what margin is essentially is, it's borrowed money. You're pretty much borrowing money from the brokerage to go and trade and buy stocks, buy securities, buy, Amazon, Apple, whatever it may be, right? You get money from the brokerage to go buy stocks, and in return, they get however many percentage points, whatever, 5, 6%, I don't know what it is, depending on what brokerage you guys use, but that's what it is. It's margin. That is number one. Avoid margin. And I don't want to say everybody out there that's using margin, they're idiots, they're stupid. I don't want to say that. But if you're using it irresponsibly, if you're too much on margin, I believe that is a bit dumb. Let's put it that way. But yeah, you could use it safely. But overall, generally speaking, I think margin, generally speaking, could completely ruin you because, guys, again, this is borrowed money. So let's say you buy a stock, you lever yourself up, you buy a crap ton of it, a lot of it on margin. Let's say you have 25% of your own money in it and 75% margin, and let's say all of a sudden that stock starts to go down a ton. Let's say the market crashes. Could you imagine if you were all margin back in January 2020 before that big crash in March? Could you imagine how badly you would have gotten screwed? Because when these stocks go down, when the market in general goes down, what the brokerage does is they give you a margin call. They're like, "Hey, Stas, you gotta give us that money back, or we're gonna sell out your shares for these massive losses. You're gonna have to put money into your bank account." So let's say into the brokerage. So let's say, for example, again, let's say I borrowed money from the brokerage to buy, Apple stock or whatever. Then Apple tanks, and they're like, "Hey, you gotta put money in there to come back to our maintenance margin requirement or whatever, or we're going to sell out your securities for a big loss." I mean, that's what they do. They have the right to just sell out of your positions for massive losses, and you're on the hook. I mean, you're on the hook. So I don't like being in debt, and I come from, I don't know if it's an old school mentality or whatever. I just don't like having debt. I like to trade with money that I have. It's mine. Sure, I could be missing out on returns, but I can sleep better at night. I don't have that added risk of having 50% of the brokerage's money in my account, and if something happens, I'm screwed. I just don't like that. So number one mistake, and I don't want to say it's a mistake, but let's just say number one thing that could ruin you is margin. But if you use it responsibly and if you're more advanced, you can make some good money using margin. But generally speaking, I don't like it. And for me, I don't use it. And for the average person out there, although I'm not a financial advisor, I wouldn't really recommend using margins. So that's number one. And number two, which could also destroy you if you're a bit irresponsible, is putting too much money into spec plays, also known as speculative plays, stocks that are not really the safest. Let's put it that way, right? These stocks could go out of business in 2 months, but they could also 10, 20, 30, 40, 100x in the next 10 years. That is a spec stock, right? Think of, Virgin Galactic. Think of, one of my big ones was NEO back when it was, $2, $3 a share, $5, $6 a share. If you're a longtime viewer of this channel, and I was talking about NEO back then, that I was buying NEO. I didn't have a crazy amount of money in it. I only had $2,000, $2,500 in it because it was a spec play. It was a stock that I know I'm going to buy and hold and put an amount of money that I'm completely willing to lose, and for it to go to zero. If it did go to zero, I wouldn't care. That's the right way to do a spec play. Put money in that you're willing to lose, but you also understand, it could go to zero, but it could also 10, 20x. And in my case with NEO, again, I was buying in $2, $5, $7, $6. My average cost is like $5, $6 in my long-term account. And quite honestly, I don't really check my long-term account that often. So, it's probably like 5 or 6, maybe even a little higher than 6. But either way, I pretty much 10x that. I turned that 2.5K to 20,000. That is what a spec play could do to you. But again, going back to that potential mistake, if you put too much money in a spec play and it goes the other way, not like NEO where NEO went up for me. Let's say it goes the other way and it dumps. You could lose so much money where it impacts your life in general, because let's say you put in 50% of your net worth into a spec play. You could hit the lottery and make a killing. Could you imagine if I put half of my net worth or all of my net worth into NEO? Man, that'd be nice. That would be nice. Let's be honest, guys. But I didn't do that because I had the proper risk management in place. It would have been completely irresponsible of me to put in half of my net worth into NEO a year and a half ago. That would have been stupid. So you guys have to realize that spec plays, they're great. I love them. They belong in portfolios, but they don't belong, in my personal opinion, anywhere above 5 to maybe 10%. 10% for me is kind of the upper end of the threshold. They don't belong, again, in my opinion, anywhere above 10% of one's portfolio. So let's say, for example, you have 25% in spec plays of your net worth. I would be a bit concerned there, but anywhere from 0 to 5%, that's healthy. Me personally, I might be at like 4% spec play, but now that NEO grew a lot, it might be a little bit more than that. I don't know. It's interesting the way things have gone. But number two is, again, don't put too much into spec plays. You have to find the healthy range for you and invest that much. And number three, I know a lot of you, if not all of you, will agree with this. And this is jumping into options / leveraged products too early. That is a big mistake. Options, whether you're buying calls, whether you're buying puts, you're writing calls, you're writing puts, whatever, strangle, whatever the heck you're doing. If you're not experienced, if you're a beginner, this could absolutely ruin you. Sure, if you're in advanced intermediate, options, guys, oh man, you can make some good money, especially writing options. That's better. I like doing that more than actually buying calls and puts. But if you're a beginner, jumping into options, not a good idea. Leverage products, not a good idea. And by that, I mean, ETNs. You guys remember those ETNs I used to talk about on the channel it's been over a year, I feel like, since I've talked about them. And the truth is, I don't talk about them anymore because I don't trade them anymore. I used to trade them. I made money on them, but it was way more inconsistent. It was way more inconsistent than what I trade right now, which is mostly large cap stocks. The leveraged ETNs, guys, they are very difficult to play. And, if you're a beginner, you're not experienced, advanced, I would not mess with them whatsoever. And some of these include, you guys remember UGAZ, DGAZ. I believe they actually got delisted. What are some other ones? There's some gold ones, JDST, JNUG. These are a couple of leveraged ETFs, ETNs. Then we also have ones, take a look here on my screen, guys, SQQQ. This is one that I would play now, although the other ones I'm probably not going to play those anymore. But let's say the markets take a hit, NASDAQ takes a hit, SQQQ could be a play because this goes up when the NASDAQ goes down. So that's a way that you could play the inverse of the NASDAQ. But overall, I would not jump into these unless I have a lot of experience and a lot of time on the charts studying how they actually move. Because listen, guys, I've lost over $10,000 easy in my first years of trading, playing with options and these leveraged ETFs, ETNs, trying to hop in, make a quick little, 10x on options, or, making a little 20% in a day on these leveraged ETNs, ETFs, whatever. Trust me, guys, I've been there. And again, I lost easily over 10 grand. It might be 15, 20 grand. I'm not sure the exact number, but I've lost easy $10,000+ on these ETNs, on these options. And like I said, not options really. Options are great, but more with the leveraged ETNs. I wasn't as consistent with them as I am with and was with the large cap stocks that I typically trade and talk about now on the channel. So, for me, I just dumped them out of my arsenal for the most part, although I will trade SQQQ from time to time again. The inverse of that is TQQQ. Another one is SPXS, which goes up whenever the S&P 500 is going down. SPXL goes up whenever the S&P 500 is going up. So these are some that I might play, but overall, I wouldn't really hop into these. I would much rather learn how to trade large cap stocks, mid cap, even smaller cap, depending on what you like. I think that is much more attainable, and you could be much more consistent doing that as opposed to these leveraged ETFs, ETNs. So what are your thoughts? Let me know down below. Those are the 3 mistakes that could ruin you, possible mistakes. I don't want to say people that are doing these are idiots, are bad, or they're making mistakes, but generally speaking, a lot of people that mess with these things, especially too early in their careers, they get burnt and they get turned away from the stock market and they have a bad taste in their mouth, and quite frankly, they never come back to the markets after that. So yeah, be careful, guys. Let me know your thoughts down below in the comments. As always, if you all enjoyed the video, hit the like button, subscribe to the channel. Don't forget to get into the Strive Smart Discord chat and the Facebook group. Grab yourself 2 stocks from WeBull valued up to $1,600. All you have to do is deposit $100 into the account, and that's how you get the 2 free stocks. And you could also get $30 from M1 Finance by simply opening up an account and depositing any amount of money. All of those are free, again, and linked right down below in the description box. Same with the Patreon. If you guys want to support me and the channel a bit further, check out that Patreon. I would greatly appreciate it if you checked it out and signed up. That is linked right down below. So I'll catch you all in the next video. Thanks for watching. As always, stay safe out there. Have a great weekend. Keep crushing the markets, guys. Peace out.